Pete, our state of play looks pretty good, right? S&P holding above 4,000. You got the new records, the VIX under 18. Yeah. Economic data continues to rip. And then all the way over on the right there, 10-year note yield 170. Rates, staying put, too.
Yeah, and people are very, very comfortable right now, Scott. There's absolutely no doubt about that. I mean, the idea that people had been looking at this market and having some angst, I think, at times because of some of the movements that we were getting in specific areas of the market and some of that overpriced movement. And I just heard the guys talking about that. Some of the names out there that were running to the upside. Well, right now we are seeing the quality names that are running to the upside, a lot of the technology names that are moving to the upside, but it's also financials. We've got materials. We've got a lot of different areas of the market that are participating. And you've got a VIX, like you say, around 17, 18. That's incredible right now. All things considered, just a few weeks ago when we were looking at the VIX and we were in the mid-20s and at times pushing up to the upper 20s, and yet now here we are in the teens, and it seems like it's a very comfortable spot for people. I would caution a little bit, though. Don't get too comfortable. I like these markets. I like what we're seeing, but everything that I am seeing right now is extremely short term. And so what that means to me, Scott, is I'm not talking about things that are expiring in April. I'm talking about options that people are buying in droves today all over the place in different categories. But what they're buying right now are all expiring on Friday. So there isn't a long-term bullishness right now, at least the tone of what we're seeing right now in the derivatives markets.
Maybe there should be, Joe, given the broadening of the rally. You see the new highs today, Joe, and the list? We're talking Facebook and Alphabet and Microsoft. Sure. OK, so big tech is hitting new highs. You've got the home builders, Lennar and Pulte, hitting new highs. Kansas City Southern, Union Pacific, J.B. Hunt, Whirlpool. It's about as broad as you can get, along with the places to look that Pete just told us about.
The formation of the market is about as perfect and as sunny as an investor could ever want. Keep in mind, oil is actually falling. It's below $60. To your point before, we have an unemployment rate at 6%. We have the ISM services with the highest number since 1997, and bond yields are falling. So the economic optimism is real. It's reflected in the good news in the economy. And what we now are witnessing as we enter a new quarter, we talked about this last week, is, to your point, the broadening out. And the broadening out is now coming from the established growth names. So you have your Tesla up 12% in the last 5 days. You've got your Alphabet and your Microsoft up nearly 8%. NVIDIA up 7%. Lam Research up 7%. So technology is participating once again. And this formation is a really strong one heading into earnings. Stay invested and enjoy it.
I'll tell you what, Joe, it's the tech names and it's some of the other names. If you look at the ETFs, multi-year highs today. Bryn, steel, highest since 2012. Industrials, the XLI, highest since 98. Home construction, I gave you some of the individual names there, like Pulte and Lennar. The home construction, the ITB ETF is the highest since 06. The builders, the highest since 06, the XHB. And then the materials, the XLB, the highest since 98 as well.
Yeah, I mean, well, first of all, as it comes to home building, there's more real estate agents than there are homes for sale right now. And so we definitely have a home shortage. Materials are doing incredible. I mean, I think what Joe just said is so important. Sit back and enjoy it because you have this like Goldilocks stock market really last week and this week as everything's doing well. And I think investors have to remember going into earnings, I think one of the reasons the tech stocks are doing so well is where do we know we're going to get consistent, really strong earnings? And that's going to be, obviously look at Lam Research, Microsoft, Apple, Google, Facebook. They're going to have great, consistent earnings, and they're going to have great, consistent earnings all year. Now, maybe the year-over-year comps are people, poke holes at that. But still, I think you have to stay invested. That being said, 94% of stocks in the S&P 500 are over their 200-day moving average. You have to go back years and years and years to see that. And so really everything's has rallied so hard. And I think that you have to look and say the market's not thinking this infrastructure bill is going to get passed because if it does, I think the taxes that have to pay for it, you have to re-rate a lot of earnings because it's going to be a direct impact. So wait and see, stay invested. But I do think manage your expectations that the back half of the year could look very different than what it does right now.
Yeah, maybe that's what the market is saying.